jobless claims. And then after the close, we will be watching for Netflix earnings. So just to start on Netflix, really, first of the major tech firms to be reporting, comes as the share price trades up 42% year to date. And because it's that first major tech stock reporting, it's going to get quite a lot of attention. Now, as far as expectations are concerned, just bear with me whilst I pull up that chart for you. Just as far as expectations are concerned, we will be looking for an increase in revenue of around 16% to 11.05 billion US dollars. EPS is expected to rise to $7.07 per share. That's up from $6.61 in the first quarter of this year and up 45% compared to a year ago. So very strong numbers. Expecting margins to improve to 33.3%, up from 27.2% year on year. Very much going to be looking to see how advertising is contributing to this increase in revenue and also the subscription levels, and what that mix is. Obviously, let's not forget that subscriber numbers are no longer going to be a number that will be released by Netflix. So just having a quick look at this chart, we can see the share price rallied to all-time highs there of 13.30 just at the end of June, has since come away and is just finding some support there around the 12, there above 12.30, sit below the 20 SMA. It's also fallen out of that rising channel that we've seen since April. Very much depending on sort of looking for a bit of a breakout here, because this is the RSI, which is also neutral. Buyers are going to need to get a rise above that 12.75 level, that's the 20 SMA, in order to make another break towards the 13.40 all-time high. On the downside, if we get any disappointment in the numbers, then we'll be looking for a breakdown of that 12.30 level. That's the low that we saw in July. We actually saw that last Friday. So if we get a break below that level, that's also the 50 SMA, which is around the 12.20 level. So when I say 12.20, 1,220. A break below there opens the door to 1,170, which is the level that's offered support and resistance over the past few months. So there, levels we're watching out. Just also, whilst we're talking about Netflix, just have a quick look at what's going on with the NASDAQ. This is the NASDAQ here, trading just off record highs that it hit yesterday. So it rose to a record high yesterday of 23,046. We were down a little bit earlier today. Now we're sort of more neutral, just still holding above this rising trend line that dates back to 14th of May. Can't really get a close above that 23,000 level. That's what we're looking for in order to be able to push higher towards the 23,500. Quite a lot going on, though. I mean, not only have we got Netflix, as I said, we've also got tomorrow, we have the retail sales, which are expected to improve slightly compared to last month, up 0.1% compared to a 0.9% decline. Initial jobless claims as well is going to be in focus, expected to rise to about 235 level, up from 227, as the resilience in the jobs market really shows seems to be holding up. But we've also sort of had this news of Trump looking to get rid of Federal Reserve Chair Jerome Powell. Those rumors seem to be picking up pace as the US session today sort of moves forward. So that's also something else to be very much watching out for. Obviously, if we get a replacement of Powell who's more expected to be more dovish, then that's going to be pulling the US dollar lower and could help stocks in the near term. Although I've just received a note that Trump has said that he's not planning to do anything in the near term. So that might just see those rumors ease off a little bit. Just whilst we're talking about the US dollar and those figures, worth looking at US dollar, Japanese yen. Quite a lot of volatility. Look at that move we've seen today on these rumors. And also we saw the PPI data released, which came in actually a little bit weaker than expected, which eased some of those concerns over the CPI data, which shows that inflationary pressures have been building, at least modestly, following or most likely owing to Trump's trade tariffs. So we've seen strengthening in the US dollar, looking for a solid move, a meaningful move above 148.65. Excuse me. That's what we need to expose the 200 SMA and the 150 psychological level. Doesn't seem to be quite there yet. I wonder if we get some strong data in tomorrow as far as retailer sales are concerned, that might hit that. And also if we get some encouraging numbers from Netflix could drive US dollar higher. And then just finally, also just going to take a look at sterling US dollar. I've been watching sterling US dollar quite closely. And I think tomorrow's data will be very key. That's the UK unemployment figures and jobs data. Now, we had inflation data today, was a little bit hotter than expected. Saw inflation rise 3.6%, up from 3.4%. Core inflation was also showing signs of being sticky. And this is basically as a result of the government's fiscal policies, which we've seen, particularly to do with food inflation. We've seen prices increase in supermarkets because of the wage increases. They're having to pass that on through hiking food prices, as well as the commodity price increases that we're seeing as well. So, but we also know that despite that increase in inflation, pound didn't massively react. And that's because there is a sense that the Bank of England is more concerned about the jobs outlook than they are the inflationary outlook. They consider the inflationary uptick to be potentially transient and more of a sort of spike higher than a long-term increase in inflation. Excuse me. So actually we're going to be eyes on the jobs data. Expectations are for unemployment to remain unchanged at 4.6%. Average earnings are expected to cool further to 4.9%, down from 5.2%, and including bonus to 5%, down from 5.3%. So that cooling in the jobs market, the slowing in wage growth, that will eventually feed through to cooler inflation, which is why the Bank of England is a little bit concerned about the jobs market rather than the inflation at the moment, because it sees that this could actually be a bigger problem. And again, this is as a result of some fiscal policy by the government when they announced an increase in the tax burden for employers. So since we've seen that, there has been a weakening in the jobs market. In fact, industry data suggests that job hunters are rising at the fastest pace since COVID. So if we get weaker than expected data tomorrow, that's really going to drive those Bank of England rate cut expectations. At the moment, the market's pricing in around 80% probability of a rate cut in August. That's going to ramp up considerably if we get weaker than expected jobs data, pulling the pound most likely towards that 132.50 level. We're actually at quite a key level here at the 133.75. It's the lows that we saw in June. If we take that out, it means we're creating a lower low, and that's going to be changing the dynamic of this chart. On the upside, we need to rise above that 134.50 and the 135 level, which is also the 50 SMA, in order to be able to start a recovery back up towards the 136 level. So that's great. Thank you very much for watching. I hope you've enjoyed it. And if you have, then please do give this video a like. And for more videos like it, then please do subscribe.